Welcome back. We're still focusing on the Nigeria 2015 elections, but just before we go into the next segment, that number he, Mr. Edo was calling out, the 0700 call INEC is actually 0700 22554632. Again, 070 22554632. It says that number connects to over 20 lines in INEC's office. So if you have any incidents you need to report during the elections, especially as we get into the next elections, please call that number. Okay, let's go on to this other thing. Now, after months of stalling inactivity and losses, now reports are that the Nigerian economy seems to have joined the stream of victory for the country. The capital market, which is the barometer of the economy, was on the upswing after INEC declared the result of the elections of March the 28th. The capital market gained about 8.30% in its single biggest daily gain this year, wiping out the negative year-to-date performance after that result. Now, in the first quarter, the capital market indicators lost 8.40%. Well, all of that might sound like
Greek.
Greek to some people. But the all-share index fell by 8.4 to close at 31,744,000.82 on March the 31st. Okay, now that's the negative, but we understand it's gone positive. So we have some economists here to explain to us what happened between those losses in the first quarter and today. What's changed? What's likely to happen in the course?
This quarter has only just started.
And it's just
We're
started.
seeing improvements already.
Boston Omofa actually told us that the share prices, the all share index went up as at Friday. Okay, gentlemen, let's see how this goes. I have an economist, Teriba, in the studio to help us get an understanding of what's going on there. Thank you for joining us.
Thanks.
Also here is Tilewa Adebayo, also an economist. Thank you for joining us.
Thank you. Good morning.
All right, gentlemen. Let me begin with you, Mr. Teriba. We have a newly elected president. Do you think the Nigerian economy will be a better one? Or is the result of the last election, March 28th, having any impact already on the economy?
Well, we are just a week from the election. We are less than a week from the declaration. The president-elect is going to be sworn in 29th May, and Nigerians expect much more from what he will do to change the system. You can have some effect, the fact that the uncertainty preceding the election, the fear. This time, last week, everybody was worried. The worst did not materialize. The election turned out to be largely peaceful, and the result has been received by both sides without any further rancor. That in itself is positive for the economy. The fact that the cloud of uncertainty, the very thick cloud of uncertainty that we still grappled with early this week, cleared, is good for the economy, is good for business. People who had suspended decisions will now make the decisions. They will now. Most people would have been telling you, let's wait until after election. Let's wait until after election. And the major slides in the election, of course, is the presidential one. We still have the state elections to go, but the biggest source of uncertainty, fortunately for Nigeria, has ended, without crisis. So that's positive for the economy. But it is not that, it's not you gain something from positive sentiment. But we expect much more gain from what the president-elect will do. Not just the fact that we just managed to scale the order.
Okay. So to see where we are, 1 week exactly, have you noticed any change?
Well, yes. I mean, as Ayo has rightly pointed out, I think if you take a look at the indicators, the fact that President Goodluck Jonathan called to concede that election in line with global best practices, I think sent a signal not only to Nigeria but also to the international financial markets. And the changes you notice has to do with a lot of the uncertainties. One of the key indicators which we use to measure how we are perceived internationally is the JP Morgan Bond Index. which is an index that has about close to 3,200 securities in emerging markets and has a proper capitalization of about $8.6 trillion. Nigeria's Eurobond of about $1 billion, $500 to $1 billion, is a part of this index. And it's a major plus for Nigeria to be in this index because it ranks us positively that a lot of international investors can come in here. At the high point, we had close to $25 billion of foreign portfolio investors in Nigeria. Because of this fear and uncertainty, a lot of them pulled out that money, and you could see the effect on the foreign exchange, and you begin to see the sort of volatility in the markets that this happens. The yield on this instrument in 2010, when the economy was very stable, was about 6%. As of February this year, because of all the uncertainty, that same yield went up as high as 17%. By the end of this week, you could see an immediate interest again, and the yields on that instrument has dropped now to 14%. So apart from the effect on the local stock markets, the international markets have also welcomed this development in a very positive manner, and we're now going back to what we call business as usual, what things used to be like before the elections. So it's not very important that the president-elect articulate his policy direction to be able to sustain this same growth, this same investment over the next 4 years. Because what we've turned our economy to, unfortunately, is to 4-year cycles. Everybody's always afraid of the elections. So now there's a new guy there. We know that there will be stability for the next 4 years. So you now find people are planning over the next 4 years. So if we put the right policies in place, the guys with the 20 billion can increase their 20 billion to $40 billion. And all of a sudden,
within 4 years.
Yes, and foreign direct investments can begin to increase. Then you find that $20 billion come, at least let what had left, let that come back first. And you find, when you find $20 billion chasing Naira, then you find that the Naira again, you've seen Naira has come down from about 204 now to 199. A lot of Nigerians have also put money in. 50% of our deposits actually are in foreign exchange, and Nigerians are holding between $15 to $25 billion worth of deposits in our domiciliary accounts. So if the confidence is being built and the president-elect can articulate his proper policies, then you can begin to see everybody having that more confidence and switching back from their dollar positions into Naira and dropping the exchange rate in process.